And we'll say hello and welcome back to Jenny Horne, host of Next Gen Investing here, taking a look at Home Depot.
So taking a look at Home Depot, which I will say that all things considered, this was a pretty strong report. And I was just looking at some of the analyst notes in regards to Home Depot. Seemingly, it does seem like this has been a pretty positive reaction. So perhaps the sigh of relief that Home Depot needed after being not exactly the best performer over the past 12 months. As we know, we've talked about some of the ways in which consumers have deferred a lot of these big ticket items. But actually, when you look at some of their performance as of late, we have seen shares claw back about 5% over this month. Of course, we have a few days left in the end of this month, but still seemingly holding on to some positivity. All of this to be said, though, Home Depot saw better than expected sales in their first quarter as customers continued to not drop big bucks on some of their larger projects, but still have a willingness to spend on some of these smaller projects, even as tariffs have threatened, of course, to weigh on demand. So the home improvement retailer logged earnings of around $3.43 billion, or around $3.45 a share for the 3-month period that ran through May 4th. That was down from around $3.63 a share reported just a year ago. While stripping out one-time items, adjusted earnings came in also slightly beneath actually forecast at $3.56 a share on sales that rose about 9.5% actually to $39.9 billion. That was also down from around $36 billion we saw just a year ago, and that was actually slightly ahead of what the street had been expecting. So comparable sales in the quarter did decrease modestly, around 0.3%. Comparable sales in the U.S., though, actually rose around 0.2%. Customer transactions also jumped about 2% to 395 roughly million from around 386 million, which was, well, the average actually amount spent did stay flat on a year-over-year basis. And their CEO did say the results from the latest quarter were exceptional as customers continued to engage in some of these smaller DIY type projects. They also did maintain their outlook for fiscal 2025, which is huge, as we know, contrasting with a flurry of companies, especially retailers, that have scaled back their expectations and seen the stock take a hit as a result. So I think that this was a definite sigh of relief. But again, comp sales, this is a positive trend that's actually expected to continuing to actually see their guidance shows that there is a willingness still, an appetite to spend, that not all consumers are saying, hey, we're not spending at all for the foreseeable future. They're just reallocating right now some of their priorities, which could be on renovating your current home instead of buying a home right now with a housing market that does look a bit in flux. And there's still that deferral type feeling where we're waiting for interest rates to come down before buying a home, which then does lead to an uptick in this DIY trend that Home Depot is still capitalizing well on, at least. So I think seeing a nice move from Home Depot today, a great read on the economy. Oftentimes these names seen as somewhat of a barometer for the health of the overall consumer and the overall economy.
Yeah, so not raising prices, that seemed like good news. Also, they talked about customer engagement, the spring selling season, that it improved through the quarter. And that is very telling as they, kept the guidance, but that was good news, right?
I mean, absolutely. And you have to think that as far as seasonality is concerned, we just saw the last 3 months, again, that ran through May, basically start to improve only as the months went on, the temperatures rose. I mean, we had some, unfortunately for Home Depot and Lowe's as well, some unfavorable weather-specific headwinds that plagued the South, of course, impacted many parts of Los Angeles, which actually ends up typically being a good thing for a lot of these home improvement type retailers. But the fact they're only seeing this tone improve as the quarter went on, and now we enter the quarter of course, June, July, August, where we could see, I can only imagine based on seasonality, further demand as these stores tend to, in my mind at least, really start to pick up as these summer months come into fruition. So we are seeing right now this be a point of strength. This has been one that's held on in spite of the markets being a bit in flux this morning, now looking a bit lower as far as the futures products are concerned. But I think that even with an earnings miss, this just goes to show there is a steadiness to Home Depot and a reliability, and that's why we tend to see this name outperform in times of volatility. I mean, we're still up 10% roughly now on a 12-month basis. Again, higher this month, pulled back about 13.5% from its high, but Home Depot has shown that even with a lot of unknowns still with raw material costs and some of these various labor costs, there is still an appetite to fix up your home and still spend at some of these retailers. And I have to say, I do spend myself as a DIYer. I spend a lot of money at Home Depot, so I can attest to that as well.
All right. Jenny, keeping Home Depot alive. Thank you, Jenny. You know, I will note one last thing, and that is that after 5 years of beating the street's estimates on earnings, they missed this round, and they were lowered estimates. That wasn't good. You know, just couldn't you have met the estimates on earnings and revenue? You know, that would have made people feel better. All right, Jenny Horne, thank you. Good to see you. Welcome back.